Today I'm going to talk about the UK stocks that I'm buying in September 2022. So I'm going to go over the UK stocks that I've been buying in the recent weeks, especially on the UK scene, because a lot of you guys that invest into the UK scene will know it's been an ugly few weeks. And because it's been an ugly few weeks, we've seen share prices actually go to the levels they were at in the pandemic lows, which is just absolutely insane to see we're having stock prices go back to them sort of levels. And because the UK in particular, compared to like the US, has been so aggressively sold off, I've been buying the dip very heavy in the UK side of it. So we're going to go through these stocks today. There's quite a few, so I'll keep it to only 2 or 3 minutes. But if you do want a longer video, I probably will have one on the channel somewhere, but we'll get stuck into these stocks. And as always, if you want to know what I'm buying and selling in real time, the place to be is on the Patreon. I also post 2 exclusive videos a week. I dropped this one 2 days ago, which was a stock request. So this is basically where the Discord members get to vote on me to have a bit of a look into these companies, and the stocks that were voted for were Card Factory, Flutter and Taylor Wimpey this week. So if you want to see exclusive content like that and also vote on what stocks you'd like to see me review, that is the place to be. You can join through that with a link in the description. But get stuck into these UK stocks. The first one is Barratt Developments, which I think is an absolute amazing opportunity. I think Barratt Developments, and there's quite a few house builders at the moment that are amazing opportunities. These stocks are just getting absolutely hammered at the moment, and you'll see a lot of the stock prices look something very much like Barratt Developments is right now. Since around that kind of April 2021 time, since then, a lot of the house builders have just turned quite negative. As you can see here, this house builder is down 45%. So even those very stable, profitable, dividend paying companies are getting hit a huge amount, like Barratt Developments. And like we were just saying just a second ago, we are getting very much to them levels of the pandemic, the CV lows. As you can see here, that we're actually below the level set on 27th of March, which is just absolutely crazy. Now with Barratt Developments, it trades at 6 times earnings, which house builders are going to trade at lower valuations just because the house builders, they're not going to have that much growth as compared to say other businesses. But at 6 times earnings for a high quality dividend paying company like this, I still think it's incredibly low. I think it should be somewhere a bit higher towards that 12, 13 times earnings. So that is incredible upside from here, which actually, if you look at the pre-pandemic, that would have been actually £8, which is yet over 100% upside. And if you go back to the April, that's somewhere similar again, near £8. So yeah, that's where I believe this stock should be at. It pays at the moment a 7% dividend yield. Now this was actually up 8% until it had this bit of a jump that's going on today in the UK stock. So yeah, an 8% dividend yield. Now a few people are questioning that dividend, saying, well, if the housing market is going to crash, will they be able to continue paying that dividend yield? That is up for you to decide. I think that we should be okay, and even if it is affected, we're still going to be expecting still a higher percentage dividend yield, even if there's some sort of pullback. But that's the thing. Everyone is expecting a housing market crash. It's priced in. If you look at the stock here from April 2021, it's over halved. So we are seeing a lot of these house building stocks having a housing market priced into them. And the thing is, with the UK housing market at the moment, we're not seeing it. We are not seeing a housing market crash. I've been listening since January 2021, when we started seeing the stamp duty benefit being cut. Everyone said, oh, it's going to crash. Interest rates start going up. People said, now it's going to crash. And we've been going now a year and a half, and people have been saying this housing market is going to crash, and it still hasn't happened. Now, at the moment, obviously people are expecting it to have some sort of slowdown. I 100% agree. You look at the housing market at the moment, it can't continue at the rate that it has been doing. But the rate it has been doing is insane. You look at house prices, they're way above 2020 levels. So they have been on a fantastic run, and they can't continue that on. But to have a whole market crash, I don't think it's going to happen. We may have a slowdown, we may go flat for a little bit, we may decline 5-10%, but I won't see us declining more than that, because the thing at the moment with the UK house market is we are so short on demand. So many people need houses. We do not build enough houses in this country for the demand, and as long as that happens, house builder stocks are always going to be the safe or a safe-ish play, because there isn't enough supply to meet demand. And when you're investing in them sort of companies, you're always okay. Now, like I said, there might be a bit of an impact. We might see the housing market have a bit of a slowdown. But what you're seeing now is getting priced in the worst housing market crash in the UK since 2008. And I think this is an absolute ridiculous sell-off. Like I said, I can justify maybe taking 20% off that market share or the market cap, because we are having the uncertain times. We might see housing markets affected, understand that, but to lose half the value is just insane for me. So yeah, I am buying this one very much for a solid dividend, and I think the upside as well is pretty big on this one. Next one is S4 Capital. So I've been buying a bit more S4 Capital when I can. I think this is the best growth stock in the UK side of it. Obviously in the advertising business, same again, it's been affected because of the uncertainty in the economy, and once again, I'm seeing a share price that's absolutely ridiculously sold off from £8 in September 2021, down 84%. And same again, this is now below the pandemic levels, which is just absolutely crazy to me. This business has performed absolutely amazing when you look at the business inside. The business itself has fantastic gross margins. It trades at 1x sales, which is just crazy. But fantastic gross margins, 81% gross margins. And this business has been it's kind of operated on a break-even level, and it's been reinvesting heavy into the business, expanding, capturing contracts, buying out other businesses. And at the moment, it is having a little bit of a profit dip at the moment, but that will go back to where it was previously, where they kind of break even. And then eventually, if they want to start focusing on profit a little bit more, they will do. And we'll see this business carry on performing how it has been doing in the last few years, which has been absolutely amazing growth. And it's quite a new company as well, which you've also got to remember. And this business has been on fire. And you look at the growth here, it's just absolutely insane. So this business has the path to profitability. It just needs to stop expanding as much as what it is doing, but I don't mind that. It's capturing market share, going for opportunities, and it's been absolutely amazing. We're going to be talking about this business potentially putting in $1 billion in revenue this year, and this $1 billion company that's growing at 30-40% a year is going to be a 720 million market cap. So actually that one-time sales is probably going to drop to a 0. Something I haven't got the time to work it out exactly right now, but it's going to be a 0. Something on a price to sales ratio point of view, which is just crazy. So yeah, fantastic business here. Balance sheet is still pretty strong even after all the acquisitions they made, 38% debt to equity, founder-led company, and as well the founder does own the biggest stake, as you can see here, 9%, which is fantastic as well. Also the employees actually own 9% as well, which is a great incentive for them. So that's S4 Capital. I think that's a great growth stock opportunity here. Next one is actually one I sold. I made a video separately on this, why I sold AA Holdings. Should have done it a while ago. Moved that capital into Flutter. I bought Flutter because I wanted to have more companies that are focused on the US growth. Flutter have that through FanDuel. This is the #1 platform in the US at the moment for online gambling. And with Flutter, you also get some of the more stable UK brands, for example, like Paddy Power, Betfair. So that also generates a good amount of profit for the business, so they're not burning through as much cash as, say, like a DraftKings, for example. FanDuel is the #1 player in this area in the US at the moment. It won't have as much growth, Flutter won't have as much growth because it has the kind of mature platforms like Paddy Power and Betfair that slows it down. But FanDuel will really drive the growth forward for Flutter in the next few years. And as this area, it's a new area, this US gambling space, and you can see here the growth in this area is insane. You can see here that there's a CAGR projected of 17% at the moment in the United States online gambling market, which is one of the biggest growing TAMs going forward in the next few years in the US. Forget EVs, a lot of people are missing this opportunity. People are staring at EVs and not staring at this opportunity that is exploding at the moment. Very new sector, and FanDuel is in a very good place to capitalize on it, as well as DraftKings. The thing with Flutter is it has the more mature parts of the business which generate good amounts of profit, and actually FanDuel itself is actually going to generate adjusted EBITDA profit going forward. But the more that the FanDuel expands, it's going to be the faster growing part of the platform, so you'll see Flutter's revenue actually start exploding more and more, and you'll actually see the profit jump up more and more as FanDuel keeps ramping up that profit in, which has only just turned a corner. So you imagine what it's going to be doing in 3-4 years time. So yeah, I wanted to have a bit more exposure into this space, but also more of a stable business with these profitable parts of the business as well. So yeah, I thought I'd switch that up from AAA, that's been, in my opinion, making a few bad management decisions, which you can see the full video for if you want to see more information on that, and then put that into FanDuel. The next one is Revolution Beauty. So I've only been a shareholder in this one for a couple of weeks. I am currently up on my position. I'm somewhat up like 13% or something. At the moment, shares are currently suspended at the moment, but I did pick up a few shares in Revolution Beauty. I have done a dedicated video on this stock last week, which I think is like 25 minutes long. So that video is totally worth watching rather than me explaining it in this video. But yeah, I'm just playing this one as a bit of a high risk play. It's obviously very high risk because you've got shares suspended, but you're waiting for the auditor to kind of approve the numbers, and it is currently unprofitable. So this is the highest risk UK stock I have. It used to be Card Factory, but nowadays them guys actually make money now, and we're going to talk about them actually in a minute. And they've also sorted the debt out on the balance sheet. So yeah, with Revolution Beauty, I'm looking at this company at a 58 million market cap and thinking that at the moment, there's a lot of negativity priced into this stock. You look at what the business is doing financially, and basically it's now getting valued off that it's basically going to go bankrupt. And if this business, which it does have that risk, is found to be fraud in the numbers, which is the allegations out there, then obviously this is going to go to zero. If it isn't, then obviously this business is going to go absolutely flying at this sort of valuation. So yeah, that's why I'm buying this business. The products are absolutely amazing. It's been doing very well on sales. It's having a few issues because of the Ukraine and Russia situation at the moment, but apart from that, the company is still growing major amounts. So yeah, I did buy some Revolution Beauty, and it actually makes sense to flick to Card Factory since we just mentioned it. Did pick some Card Factory up. I think this stock should be 80p right now. The business turnaround at the moment has been absolutely amazing. They're back to good growth, good amounts of profit. The balance sheet is getting solved. And yeah, same again, it's a common theme. It's basically at the CV levels, even though back in the CV times it was, doors shut, doors closed. And now the business is starting to make really good progress on the turnaround. I won't speak about this too long. Same with Flutter, because I mentioned it in this full video on the Patreon. So yeah, if you want more detail, that's the one to be watching. The next up is National Express. I did buy a little nibble of this, but it has gone down a little bit more since then. So I might be buying some National Express probably again next week, to be honest with you. Same again, is very much as a lot of stocks are, back at them pandemic lows. The business is starting to move very much back into a positive range. Obviously, there's been a lot of restrictions because of travel, a lot of people still working at home, but now it is starting to move back to them pre-pandemic levels. The revenue is starting to move back into the right direction. It's starting to move into the profit into the right direction. And the thing is that before the pandemic, they were winning major amounts of contracts, and those major amount of contracts are now starting to add into that revenue now. And so, yeah, I think that one of the big things that needs to pick up is more and more people traveling. And if you read the recent update, that was the suggestion that was starting to happen. So I did pick some NEX up. The next one was some Hollywood Bowl. So yeah, 7 times earnings. The growth's been, they've had a fantastic 2021. They've expanded into Canada. Really excited to see how that one goes. 7 times earnings. It says a 1.7% dividend yield, but that's only because Google hasn't picked up the final dividend that will get paid out. I think it's December time, so that'll actually put it up to about 4% dividend yield. So yeah, 7 times earning, 4% dividend yield. Fantastic 2021. Moving into 2022, can they expand into the Canada? How successful is that going to be? Is it going to drive revenue up? Is it going to still drive profit up? Yeah, I'm looking forward to this one. It's a stock that I always wanted to make one of my top 3 positions, and I never did. Regretted it massively, and now that, same again, this one's kind of pushing towards them pandemic levels. It is up slightly on them pandemic levels, but not by much. Hopefully I can buy some more shares in this one. Next one's Cakebox. I made a video about this yesterday, so same again, I'm going to keep this really brief because if you want more information on that one, yesterday's video is a place to be. So I'll leave it at that one. And Airtel Africa, I did buy a little bit more Airtel Africa. It's probably the only one that I know of on this list that's actually been holding up quite a bit on the share price. Even then, it is having a little bit of a dip, as you can see, 20%. So I am averaging up on this one. But even with me averaging up, I still think the valuation is pretty decent. 8 times earnings, 3% dividend yield. They've got really good growth, really capitalizing on that African market of the telecommunications and the mobile money. Yeah, I'm a big fan of this one. And basically, the thing is that even though the share price is up a crazy amount, and I am averaging up on this position, the actual valuation metrics are the same here as it was basically back here. So even though I am averaging up and I am buying this higher share price, the actual valuation and the valuation metrics are the same as where it was basically 2 years ago. So yeah, that's a crazy thing with this one. So I guess you could kind of say that it is kind of still very much near valuation it was 2 years ago after so much progress with this business. So yeah, I am trying to buy this one. The only awkward thing is I would love this to have a bit more of a dip, like like some of these ones are, if it can happen. So we'll see. So those are the UK stocks I'm buying, guys. Hope you enjoyed it. I probably will prioritize more UK stocks once again, as they are kind of sucked down at these sort of valuations. But I'll just update you with the ones that I've been buying recently. So I hope you enjoyed the video. And remember, if you want a bit more of a deep dive onto these stocks, I had to keep it brief because it's already quite a long video with me only talking about them for 2 minutes. So you can imagine if I talked about them for 10 minutes, how long this video would be. So yeah, I mentioned in the video there's a few more deep dives on the video on some of these stocks. So like there was a Cake Box one yesterday, there was a Revolution Beauty one last week. If you want a bit more information, Card Factory, go watch the Patreon video. That was same again, a good 10-minute talk on that one. So if you do want a bit more information, there's plenty of other videos I've done on them. But hope you enjoyed this little recap and this transparency of me sharing with you guys what I'm buying anyway. And as always, smash that like button, and if you're new, subscribe, and I'll see you in the next video.